our average IRR is over 40% right now for our exits. And this one will be 10, 12% IRR. So it hurts the average. But in this market, owning less than 2 years, making any money, I feel is a huge win. So let's take what we can get. Let's hedge our risk. That's what it's all about, hedging risk. Put a small win on the board and move on.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is David Lilley. He's the founder and CEO of REAP Capital. They have 785 units under management, over 100 million in those assets of value. It's grown to include REAP Management and REAP Construction, which you're going to hear him talk about bringing in-house in the show. Began in real estate in 2013, but purchased their first multifamily property, a 6-unit in 2018, and then started to scale quickly since then. He's a military guy, which you'll hear me reference as well, infantryman in the Marines. He's been deployed numerous times in Baghdad and even the Philippines, and he was a firefighter, so a first responder as well, which I can relate to. So I love having these guys and gals on who have served and are now doing big things as business owners also. So you're going to learn a lot from David today, including why he's selling a project right now. And some people say, "Oh, you shouldn't be selling right now." Well, you're going to hear why I think he's making the right decision at the sale right now. And he's going to talk through that process. So whether you're active or passive, I hope you will listen and especially hear that part of the show. David, welcome to the show. Honored to have you on. First and foremost, thank you for your service to our country. I just always want to honor our veterans, and I'm grateful for the sacrifice made. So thank you for that, just first and foremost. Second, and I'm looking forward to diving into the growth, right, that you all have had. You've built a real estate, really private equity firm, right, and hired the right people, and you've moved fast, and that's what everybody wants to know. All that, I get questions all the time. How'd you all scale so fast? Or what was the key things that you did? And I want to dive in to some of those same things with you. I know many of the listeners want to know how you have done that, and we're going to talk about some specific projects also, and maybe something that's happening soon within their portfolio. So, David, welcome to the show.
Thanks for having me on, Whitney. Yeah, glad to be here.
Awesome. Well, let's do that. Let's jump into. I know you started transacting in real estate in 2013 or so, but really first syndication was 2018. Let's talk about that process from 13 to 18. Why start syndicating, and maybe you had mentioned even before recording, it took a while to get off the ground. Maybe highlight some things there. The struggle maybe to get it, pushed off the ground, like you mentioned, and then we'll go from there.
Yeah. So 2013, bought a single family home, leveraged a VA loan. So lived in it, for the first year or two, and then bought the second home and started renting the first one out. So I was a firefighter at the time, making a decent wage, but, I was using that hack to start a real estate portfolio and slowly grow. And, prior to that, I had always been drawn to real estate. I had the very simple kind of view in mind that, why pay down someone else's mortgage? Why not pay down my own? I felt like rent was just throwing away money. Maybe a different story these days, but that's what got me into it. After, the first couple of years went well, I was getting a couple $100 a month. The next decision was, okay, how do I scale, continue to do this, or jump into something with a little more economy of scale, multifamily. And I had the opportunity to take a job working overseas, making really good money, which enabled me to jump into that first 6-unit property in Tampa in 2018. So founded the firm in 2017, based in Dallas. So Dallas was very hot market back in those days. Hard earnest money was the name of the game. Really couldn't win a deal without it. So at the time, none of my offers included that. I offered a bunch in Dallas, so took me 6 months or so to land that first deal. And that was because I chose to look into another market with the same kind of fundamentals and growth metrics, but, lower barrier to entry, no hard earnest money. And so that led me to Tampa and Phoenix, first and second acquisitions.
Awesome. Well, it sounds like you took action there or even took a different job, right? To higher income. And then you were purposeful with that income buying the 6 unit. How did you get to the deal in 2018, that first syndication? What was that?
Mm-hmm.
Maybe give us some details of that project and just how you pulled that together.
Yeah. So at that point, I had kind of identified my large markets where I was focused, really kind of pivoted away from Dallas because, I just couldn't get any offers accepted. So I was really looking in Phoenix and Tampa metros, kind of really Florida as a whole, just scour all the broker websites, also LoopNet. And then, I'd find a deal, underwrite it. And if it made sense, I'd do some more kind of due diligence on the whatever submarket it was in. And so that Tampa deal just happened to work. The numbers looked great. Caught it when it first came on the market, and made an offer immediately, and worked out.
Tell me about your team then, to get that first deal done.
It was really just me in the business, and a couple. Really, it was a friend of mine, was one of the investors, a colleague of his, and my parents. So that one, not a true syndication. It was really a JV. We all had voter interest, titles in the company. Yeah, that was really the first time we had pulled money together to execute an acquisition.
Now you did it. That's incredible. What was the timeline from the first one to the second one?
A couple months. Yeah. So the second one we bought, I want to say it was August. I think we closed in November of that same year. So yeah, I mean, the next one landed in our lap a couple weeks after closing, I think, if I recall.
I hear that so often. It's so interesting. Like, it's such a grind to get to the first one, right? We're like scrambling and pulling people together you never imagined, just by making calls you never thought and going places and then all of a sudden.
Yeah, that's a fun story. I mean, we had so much interest from our friends and family, like our networks, after we bought that first one. No one had heard about that kind of investing, and so the next one fell in our lap. We were like, oh, this will be super easy to raise 450,000. We'll do that easy. I mean, we barely got that thing closed.
To speak to, so just so the listeners are reminded again, like you all. You've grown fast, right? Since then, and what was it? 100 million in assets, 785 units. That's what's in your bio anyway. But speak to some of the critical things that allowed you to scale, or maybe the things let's start there. Critical things that allowed you to scale quickly.
I mean, it's definitely doing all the little things well. All the little things matter. They add up to big results. I think I'm fortunate in that I do most things pretty well, so I was able, really, it was a one-man show until beginning of 2022, when I brought on my first full-time guy. So prior to that, I had partnered with other sponsors on deals. Didn't partner with anyone in the actual business, but kind of partnered on deals. But really, all the grunt work was, my burden to bear. And so getting to 2022 and bringing on that first full-time hire was a long road.
So your first full-time hire was in 2022, and what position was that?
So he wore a couple of hats, acquisitions and investor relations.
Okay.
And so now he's really more full-time, just investor relations that we have. We've got, a full-time acquisitions guy, 10 full-time people on the corporate side.
So within the last year, then you've hired 10 people or 9 or 10 people.
This last year has been a big year in terms of hiring. So, but we also, that includes property management staff and construction. So, we vertically integrated with property management last year and construction beginning of this year. So that includes some of those team members as well.
So last year was major.
Yeah.
Right. What was some of the biggest challenges, say last year or this year? I mean, bringing management in-house and construction. I mean, that's some big things to vertically integrate, especially even at 100 million, right? It sounds like a lot, but to bring that in house, that's difficult, until you even have a lot more scale.
It is. Yeah. Property management has been probably we've had the most growing pains. Construction, fortunately, the first guy I hired was just fantastic, still is. And, he's just taking it and running with it. Property management has been a little more challenging. And frankly, I think it's just a tougher job. It's really make it or break it in any investment. So growing that company has been difficult, but it's been good for us. It's made us much better on the operator side because we're way more in the weeds on property management than we would have been had we outsourced it to a third party.
And maybe it's too early to know this, but I just wonder, bringing property management in house, it can be a major distraction too. We've experienced it firsthand, right? Yeah, I mean, we have, and it's part of me says, you know what, we probably could have done more deals if we didn't bring property management in house. Is that would you feel that way?
I don't know if that would necessarily be the case. We've had our foot on the gas pretty well, but I mean, it has taken some of my focus, so into maybe we'd have more investors or would have networked more or whatever, those type of functions had I not been spending a lot of my time dealing with property management issues, and building out that company. That's certainly true.
What about some of the maybe crucial hires over the last 2 years, maybe outside of property management, in construction? Anybody else, that was like, man, this really helped us, this position, or maybe this person's skill sets, helped us to move quickly?
Yeah. So the first critical hire for the property management company was a vice president of operations. She got us through, this really challenging year. And I guess it's been about 3 months ago, we brought on our first regional manager under her to kind of just share some of the workload, and she's been a real critical hire because now the VP can focus on more VP stuff and not being distracted with regional type duties, So that's been a critical hire. And then just, the construction staff. I mean, having that in house. And one of our superintendents, probably the most critical hire because he's the guy assembling all the crews on site, and he's just been fantastic. So, all the construction team, but those couple positions certainly very important.
Any unique ways you approach hiring? We've talked about the hiring process many times on the show. I've gone through our hiring process, and it's probably even changed since then. But any unique ways that you approach hiring so you're hiring top talent?
Yeah, I try to hire from my network, people that I've known for a long time, people that I know to be talented, and the most important thing is people that I can trust. I mean, you can find people with great resumes all day, and then they get on board and there's no telling what's going on behind the scenes. And it takes, for me, I don't really trust anyone. It would take years until I truly trust someone. So I've been fortunate to be able to hire people that I knew internally, like in my internal network prior to bringing them on. So that trust is already there. So most of the guys on the REAP Capital team, they had no experience or they were very entry level, but I've taken the time to train them up and teach them. And I'm a firm believer in hire the character and then build them to who you want them to be, essentially.
Yeah, you can't teach character often, right? Exactly. Especially on the job. You need them to come with that for sure. I think it's a missed opportunity often that people don't search their own network, right? For key hires, and often, and I would say it hasn't worked for me every time or too often. But when you can get referrals, it just pushes you a lot further down the road, right? Or people like you Absolutely. Said way you've done it, where you already knew them. You've already had a relationship for a number of years, in one way or another, that there's already this major trust component, right? And that's, oftentimes, and I know in our interview processes, I can ask somebody about job specific things and they may know that, right? Like the back of their hand, but boy, it's hard to judge character, right? Through, even a few hours, right of an interview, or even numerous interviews, it's hard to really know, that you can trust somebody. And it's a risk, obviously, you have to take sometimes, but you're way down the road if it's somebody you've already spent time with for a long time.
Absolutely. Yeah.
So, what about? I know there's a project you and I discussed. Y'all have had a number of exits as well, in the last few years, but you got another one coming up. And I wanted to, because this has been a question as well from listeners and from other people. It's like, should we still consider selling right now? Depending on the market or what. And so, my question to some guests have been like, okay, what are some of the reasons that you are selling, or that you would consider to sell, and actually you all are selling something? So maybe you can walk through that project a little bit, and why you would consider selling right now.
Yeah. So we've exited our first 5 deals. This is deal number 6 that we acquired. Exiting, and coming up February will be 2 years of ownership. So pretty quick turnaround. 2 years is also, coincidentally, typically how long you buy that first rate cap for. So our rate cap's coming due February. We've got the money escrowed with lender already to purchase a replacement, but that gives us 1 year. There's no telling. I mean, money's on the Fed lowering rates considerably next year, but I'm not comfortable taking that chance. With a 1 year extension, we could be back in the same boat here from February, which I don't want to be. So the other consideration was refinance. We had a couple of unexpected events with this property. A dozen units were taken down from a 100-year flood, and so that affected occupancy. And then we had to replace the entire gas line system of the whole property, which resulted in more vacancy. So, we weren't at a point where the property had seasoned long enough for us agency debt. And on top of that, treasuries have skyrocketed over the past couple months, coming down lately, fortunately, but it just now was not the time to refinance. And then who knows where we're going to be in February. It's still too volatile. We had the opportunity. We had an offer come in decent. I mean, our average IRR is over 40% right now for our exits, and this one will be 10-12% IRR. So it hurts the average. It hurts the average, but in this market, owning less than 2 years, making any money, I feel is a huge win. So really all those things kind of came into play when making the decision, to let's take what we can get. Let's hedge our risk. That's what it's all about, hedging risk. So
yeah,
put a small win on the board and move on.
Yeah. No, I appreciate your transparency, because I think it's helpful for everyone listening. And I think there's probably many that should listen closely to what you just said. That have properties right now, right? They have that rate cap that's coming due, or whatever it may be, and they need to minimize risk, right? We hate to see maybe a lower IRR return metric, actual to investors than we projected, of course, right? But I think you're wise, right, to minimize the risk.
Now's the time to act, especially if you're thinking capital calls or anything like that. You better do it now, because if we're in a major recession next year, which I think we probably will be, investors are going to be much less likely to pony up any capital at that point. So
yeah,
if you're in a position you need to do it, you better do it now.
I think there'll be more projects too, or more operators, right, that are having to sell. And so there's going to be a lot, or be more on the market to pick from to some extent, in a negative way for a number of operators. And it'd be better to sell before there's a ton of blood in the street, including your own, right? To minimize the risk. One thing you mentioned, you said 12 units were taken down from a 100-year flood. I wanted to learn from that a little bit. Speak to that, what happened there a little bit, so the listeners and I can be aware of that.
Fortunately, I think 5 buildings are kind of barely touched the floodplain. So we had flood insurance on them. We ended up, it was a net positive for us, for the proceeds we got. And it was actually 13 units. So, it was just a major flood in the area. 13 units had water damage to varying degrees, some worse than others. But, we had, right before that happened, we had kind of already turned the property around, re-tenanted it, got it to a stable occupancy, and then, had 13 units go down. So it was this kind of back and forth for a little while. So, but that's pretty much it.
Yeah. No, it's just, interesting. What would you do different from that experience, say on properties moving forward?
Not buying a floodplain.
Yeah. Interesting or unfortunate, right, to own it during that time, I guess. But man, lesson learned. Well, I'm thankful you all have it under contract, and I think you're making the right move just to minimize the risk for you and your investors. No doubt about it. David, what would you say is, other than maybe deal flow, what's a big challenge right now for you all?
It's hiring, especially on the property management side of the business. That's the main growing pain for us. We've had a lot of turnover just because it's been difficult to find, surprisingly, people, entry level property managers that are okay getting paid $60,000-$70,000 a year, which sounds crazy to me, but it's tough to find people that want to work hard for that wage. So it's been a challenge for us to staff those positions, surprisingly.
Yeah. Is there a way you're finding people, or that you all see being able to?
We do a lot of referrals, like you said. We have people that have come from other companies and they've worked with a lot of people, and they'll people that they enjoyed working with in the past, approach them, see if they're looking to make a jump, that sort of thing. Or LinkedIn. We rely on LinkedIn job postings a lot. Indeed. Those platforms.
All right, David, a few final questions as we come towards the end of our time here, but what's your best source for meeting new investors right now?
Word of mouth, really. It's always been word of mouth. We've been stepping up our marketing this year. So ads in various newsletters, making podcasts, things like this are priority. We've done a cold email campaign, which has been effective really for the cost. So that's one thing that's probably not on a lot of people's radar. But if you're doing 506C, then just make sure you're not violating any securities laws. But it's been pretty good for us. It's interesting, emailing 10, 20,000 people a month kind of thing.
So you would buy a list and blast an email?
Essentially. Yeah. Essentially. Mm-hmm.
Wow. No, that's interesting. Worth a try, I would think.
Exactly. Yeah. Yeah. I didn't know what the results would be, but it's it's too early to tell how cost effective it'll be versus another avenue. But we're stepping up the marketing across the board.
What's your best advice for passive investors right now?
Evaluate the sponsor for sure. Like you said, character is really hard to really get a grasp on. One of my pitches is, I've spent a lot of my adult life in high stress environments, from firefighter to diplomatic security to Marine Corps, and each one of those roles I was vetted. I held a secret clearance with Department of State and DoD, so maybe there's security for people in that. That's the main thing. Know who you're investing with, know who the principal is, and do as much due diligence on that person as you can.
What would you say is the number one thing that's contributed to your success?
Tenacity, I suppose, or just, I decided, back in 2016 when I was a full-time firefighter, I decided that, I wanted something more. I wanted to do something different. And so I just made it a reality. I just have made a plan and acted on it and taken action, I suppose. Maybe that's it. Not afraid to take action.
Yeah. And then how do you like to give back?
We've worked with various groups. St. Jude's, one of the ones that are, the top places that we like to donate to. as an organization, after I've got a 2 and 4-year-old now. So just after having kids, I can't really think of any demographic group that's more deserving than, innocent kids. So pretty near and dear to my heart.
Yeah, that's awesome. David, grateful for your time and giving back to us for sure. Grateful for your transparency, just walking through this exit as well with us. I think that's helpful for everybody listening, whether they're active or passive. I think I don't want the passive investors to discount that. Like I think you're minimizing risk for everybody involved there, but even walking through some of your key hires, how you all brought construction and property management in house, and the things that helped you all to scale quickly. It's just I get questions about it all the time about scaling, right? Everybody wants to get there fast, fast as possible,
Yeah.
right? I want to know those key things. And so appreciate your willingness to share some of those things that helped you also. David, how can the listeners get in touch with you and learn more about you?
Visit our website. There's a link to my calendar on there. You can schedule a call with me or fill out the contact form. It's reapcap.com, reapcap.com. And I'm always happy to help, be a resource to anyone. So please reach out.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.